Okay. So, yesterday we saw about different types of entities. We have seen what are the filing dates, due dates, what are the type of liabilities which will be there in different type of entities. Today we are going to start with the other topics. First one which today I want to explain is about EIN, that is Employer Identification Number. So just like a SSN for an individual tax preparer, we have a EIN. Okay, EIN is something which is uh, kind of a verification of your identity in front of IRS. So when you're filing a tax return, only your name and address will not be enough. You have to mention a unique number, that is a employer identification number. So what all procedure is there to obtain EIN? And second is who needs to obtain the EIN. These two things you have to remember. First one is you need to file a SS4. You need to apply through form SS4 to get a EIN. Okay, and this form can be filed online or through a registered agent over there in the US. Okay, so that's why if you are staying in India also, then also you can register any form or you can apply for EIN on behalf of your client from here. Or else if you're staying in US, you can directly apply for EIN by filing form SS4. Okay, when you receive a EIN, it will be a 9-digit number which will be assigned either to a sole proprietor. Being a sole proprietor, yesterday we saw the different entities, right? So being a sole proprietor, you can apply for EIN. Being a corporation, you can apply a partnership, estate, trust, and any other entities for the purpose of tax filing and reporting, they can apply for a EIN number. Okay. Now a sole proprietor who is a self-employed farmer, right, and who has established a qualified retirement plan or is required to file any taxes which is excise, employment taxes, and if is in the business of alcohol and tobacco, then even being a self-employed, even being a sole proprietor, it is mandatory to get a EIN number. Else, for any other sole proprietor, let's say I am working as a sole proprietor, I am not going to take a EIN. My SSN number will be enough to be listed on my Schedule C. Okay, being a self-employed sole proprietor. But if you are into the business where you need to pay excise tax or you need to pay employment related taxes, right? Let's say I have hired few employees for my business. It's a sole proprietor business only. There are no partners, there are no members or anything, but I might have hired certain members as a employees. Okay, certain people as an employee I have hired. For them, I have to pay the employment tax. When I pay them the wages, when I pay them the salaries, I have to deduct the tax at the time of paying, which is known as payroll tax. Okay, those will be Medicare and Social Security or FUTA and SUTA tax. Okay, federal unemployment, state unemployment, Medicare, Social Security, and federal income tax. So if this all taxes are being deducted for those employees, then I'll have to take a EIN number. Okay, because when you are going to file a 940 and 941, you have to mandatorily mention your EIN on it. You cannot file it based on your SSN number. Okay, I hope this is clear. Third point, what it is mentioning is a partnership, corporation, real estate, mortgage, investment, conduit, non-profit. So these are the listed members. They will be taking a EIN. But take a note that sole proprietor without any employees and without any excise tax or any pension plan, return filing are not included in the group required to use an EIN, are not required to use an EIN. Okay, so this other people which is listed over here are mandatorily required to take the EIN, even if the corporation is just a not NPO, right, not for profit organization. Still, to file a tax return, they will have to take a EIN number. Okay, generally what will happen, a sole proprietor should file only one SS4, needed only one EIN for his whole business. They will have to take only one EIN. Okay, let's say now he's entering into some other business, then he can take another EIN. For one business, there is one EIN. Please make sure that thing. Okay, regardless of number of business operated as a sole proprietor or a trade name under which the business operates. So as per the trade names, you have to decide and take the EIN. Okay. Any question till now, guys? Vijay, I can see you are unmuted, and do you want to ask any question? Okay. Next is the reporting and the payment of employment taxes for employees of the LLC must be made using the name and the EIN of the LLC. As I mentioned, for filing the 940 and 940 return, 941 returns, basically 940 and 941 is just for your payroll taxes. Okay, so if you want to file it, you need an EIN to do that. This will do not apply for a new EIN if existing entity only elected on 8832. Yesterday we saw, if you want to consider yourself as a C corporation or a S corporation or a partnership, you need to file a form 8832. Now if you want to shift from C corp to S corp, and now you're filing form 2553, so again you don't have to take a EIN. EIN will be taken once only. It will change if the business is changing its type of entity, then also there should be only one EIN, not more than that. Okay, do not use the EIN of the prior business unless taxpayer become the owner of the corporation by acquiring its stock. You should not use any EIN of your previous business, right, for filing any taxes. So if there is any existing corporation that is electing or revoking the S corp status, should use its previously assigned EIN. Means, can I say, if there is a S corporation, now this corporation is getting revoked and they are using a new entity. Okay, so this new entity will not use the previous entity's EIN. Do not use the previous. Once it is closed or once it is revoked, then you cannot use the EIN of the previous entity. But here what it is mentioning, if the S corp is getting converted into C corp or vice versa, then same EIN will be used. Got it? I hope this is clear. In some situation, a name change may require a new EIN or a final return. See, if there is a change in name, then you'll have to take a new EIN, or first you need to file a final return for the old name and then file a new return for the new name. Just like in case of 1040, we have a final return when a person dies. Same way here, if you want to change a name of your organization, then you'll have to file a final return, and then in the next, for the new organization, you will file a with the new return with a new EIN. Okay, got it, guys? I hope the EIN topic is clear. If you have any question, please let me know. Am I audible, guys, to everyone?
Yes.
Okay.
Yeah, we can hear you now.
Okay. No worries. So next one is principal business or professional activity code. This is most important. Whenever you file a return, you will find a NAICS code. What is NAICS code? It's directly a 6-digit code for representing the nature of business. Let's say you are into, it's a 6-digit code. You are into selling of tobacco products, for example. So it will have a specific code for that product. You will have to mention it on the first page of your corporate return. On the left hand corner, you will mention it. Tomorrow I will be showing you all the three forms, 1120 and 1065 and 1120 C corp. Once we complete with our basic things, we'll walk through the all the three forms to let you know what all basic things we have done from the form. So this activity code is mandatorily required to be listed on your tax return to make aware to the IRS that this type of product we are selling, or we are into this kind of services. Let's say I'm into education industry, so I will be mentioning the code which is applicable for educational related services. Okay, so code for a principal business or a professional activity are found in the instruction for Form 1040 Schedule C if you are classifying as a sole proprietor by the type of activity. What it is saying is there is a whole list given by the IRS and it is not there in your exam purpose. For exam purpose, you don't have to remember any codes or anything. That is just for practical work. When you prepare a return, you need to go through the instruction. Whenever you start preparing return, always keep 1120 instruction file open, 1065 instruction, 1120 C corp instruction, and 1040 instruction. In that, there is a one topic that is Schedule C. In that Schedule C, you will see a whole list. Along with the nature of activity, they have given the code numbers. And if you're preparing the return in software, anyways, when you drop down, click on the drop down list, it will give you the whole numbers along with the name of the activity. Okay, so this is what it is saying, and it will be a 6-digit code, and it is based on North American Industry Classification System, that is NAICS code. Okay, so you have to make sure to mention it while you file the return. The taxpayer will select the category which best describes his or her primary business activity. Example, if you are into real estate business, then the taxpayer select the activity that best identify the principal source of sales or receipt. That is, he can himself as a real estate agent or into construction business. So finally, the taxpayer finds a 6-digit code assigned to this activity, which is, here they have given one example, 531210 is the code for Office of Real Estate Agent and the Brokers. And you have to enter this code. If you are a sole proprietor, you will enter on Schedule C, line B. Schedule C of your 1040 form, guys, if you are sole proprietor. If you are a corporation, it will be added on the first page. When we see the form, first page, somewhere on the top over here, the code will be mentioned. Okay, left hand corner, the NAICS code will be there. Got it, guys? We'll see that form tomorrow when we walk through the whole form. So have you guys gone through the characteristics of the business entity? Yesterday I mentioned you guys to go through this thing. I've sent an email to everyone for the recorded session link and this book also. I hope you guys have received it and gone through it. For only first chapter I've sent right now. Okay, because anyways, when you enroll, you will be receiving a physical copy of the claim book. So that is why I have not sent the whole book right now. Okay. So see, characteristics of the business entity, which is mentioned over here. I'm not going to read it again, but whatever we left, whatever was the pending, I'll just read those things. Capitalization in case of general partnership. What was general partnership? Can anyone tell me? General partnership?
Unlimited liability.
Yes, but I want one more word.
Unlimited,
They are involved in the day-to-day operation of the business.
Active partners.
Yes, general partners. Can I say all are general partners? Use the word general partners. In exam, they will use this terminologies. General partners, correct. Yes, they will be into active business activity. Limited partnership was what? What was limited partnership?
One GP and Everest are limited partners.
Correct. One will be GP and other will be having a limited.
I've got a question for you.
Yeah.
So why would somebody want to choose general partnership over limited partnership? I mean, why would somebody want to have unlimited liability over, just one person?
If everyone wants to be a part of operations, they have to be general partner. If you are a limited partner, you cannot be a part of operations. You are just an inactive partner. Okay.
Makes sense.
Okay. Any other question, guys, from previous session? You can ask me right now. That's fine. Okay. So capitalization in case of general partnership, resources of the general partner are used as a capital, means they are bringing their assets, all the assets and contribution into the business. So capitalization will be done based on the resources brought by the general partners. Same way for limited partnership, resources of general and limited, both the people are bringing into the business the assets in the form of contribution. We will see that how the contributions can be made when we do the partnership chapter. Limited liability partnership is what? Resources of the partners. Resources of all the partners will be considered. A limited partnership in which one is general partner, other is limited. Limited liability means all are limited partners. Okay, here whatever are the resources of the partners they are bringing, simply all these wordings are saying only one thing: whatever you are bringing into the business will be the contribution of asset, and it will be the capital which will be considered. Formation, what will be the capital which will be utilized. Then operations, we have seen each partner have the right to equal participation. Okay, so if you want to give everyone as an equal participation, you can enter into general partnership. But in case of limited partnership, general partner will only have the full management rights, limited partner will have no management rights. He cannot manage the, see, one thing is operating the whole business, being on the ground level is the one thing, operating the whole business very closely, taking all the decisions that this much amount of investment we have to make, this much amount of asset we need to purchase. All these informed decisions are taken by the general partner. Next is LLP is something where which is favorable form of organization for professionals. If you are into providing services, lawyers, CPA, right, they will be called as, they can form a limited liability partnership. Here what will happen, since they are a CPA, lawyers, EA, or all the professionals, they will be there on the operation ground, they will be operating the business. But since they want to call themselves as having limited liability, but they want to work also, so the best option for them is limited liability partnership. Means they can work, they can have the nature of general partners, but when it comes to the liability, it will be limited. So can I say for the services, the best suited form is limited liability partnership. When you start organizing your business, analyze the client's nature of business, what it is, whether they are into professional service providers, or whether they are into wholesaling business or retail business, right? You have to figure out that thing. Limited liability company, unless provided otherwise, all members will have equal management rights if it's a company. See, partnership only they have given the rights limited in case of limited partner. In case of limited liability company, means liability will be limited, but all the members will have the equal management rights, unless it is mentioned specifically in the bylaws. Let's say they have a certain bylaws, they have certain article of organization, incorporation, in that they can define their roles and responsibility for each and every managers, each and every officers. Okay, depending on that, but apart from that, they will have equal management rights. S corporation is simply shareholders elected board appoints officers to manage the daily operations. Means all the shareholders, they are not going to work on daily basis, they are just a members, they are just getting income from that investment, right? If you're purchasing a shares of a company, you're not going in that company and working actually. So in this case, in case of S corporation, whole board of the shareholders, the elected board will appoint one officer to manage the day-to-day activities. In same way, in case of C corp, it will happen, shareholder elected board appoints the officers to manage the day-to-day activities. Okay, I hope the operations is clear. Capitalization, formation, we have done yesterday only, what all things you need to do at the time of formation. Liability, in case of liability, we have seen some have limited, some have unlimited liability. Transferability is simply, you have to remember, in case of general partnership, partner may transfer financial interest without loss of rights, duties, and liabilities as a partner. Let's say a father wants to transfer his right of partnership interest to his son. Okay, so he can easily transfer it without any financial interest. Means he will not retain any financial interest, all the rights, responsibility will get directly transferred to the son. This can happen in case of general partnership. Also, since he is a general partner, his son will also be general partner, and his liability will also be unlimited. In case of limited partnership, in case of transferability, what will be there? general partner may transfer financial interest without loss of rights, duties, liabilities as a partner. But limited partner cannot transfer his interest by saying that now I am limited, I'm transferring it to you. If you want, you can join as a general partner. No. If he is limited, the other person whom is transferring his share will also be a limited partner. He cannot convert himself into a general partner. Okay, means only the interest will be assigned. Interest in the business will be assigned, not the operation part. Okay, in case of limited liability partnership, that is one example you can remember is the CPA firm or the EA firm or a lawyer or advocate. There, the partner may transfer financial interest without loss of same way which we have seen over here. Okay, as I said, this are the favorable condition where all the rights of general partner will be given. So all that of the general partners partnership thing will be applicable over here, except for one thing, the liability will be limited for all the partners, all the members, that is known as limited liability partnership. Okay, then we have is limited liability company. A member can easily transfer his distributional interest. Okay, what do you mean by distributional interest? Let's say a person is entering into a business with a $10,000. He's contributing $10,000. Against that, let's say he's contributing $10,000. Against that, this company is giving a promise to pay 10% of all the retained earnings each year. So what is his distributive share? His distributive share is 10%. So if he is selling, let's say Mr. A is selling his or transferring his interest to someone else. Okay, the partner may transfer the financial interest without loss of rights. Means all the rights, duties, everything will apply as it is to the other person. And sorry, here it is. Will transfer the distributional share. Sorry guys. Mr. A will be transferring only the 10% as a distributional share. That if Mr. A is transferring it to Mr. B, now Mr. B will start receiving, even if he's not bringing any contribution, that is fine. But he is transferring all his rights of receiving the share to Mr. B. He will start receiving 10% after the transfer. Okay, the interest is, this interest is a personal property. Okay, personal property is something we will see that any immovable property which you have is your personal property. Here the word personal doesn't mean that it is used for personal purpose. Okay, in US taxation, personal property is something which is movable property, and real property is something which is your building and land, that is your real estate. Okay, so this right now, I know some terminology wordings will not be clear, but when we actually start doing the topics one by one, the whole study units we have on partnership, on corporation, on LLC, we'll see that once again at that time. Okay, for S corporation, generally may be transfer their interest to qualifying shareholder. The person should be qualifying. See, if you remember, in S corporation, there can't be any foreign member, right? So you can't transfer your asset to a foreign member. So that is what they are mentioning. It has to be a qualifying shareholder. Next is C corporation. For C corporation, shareholders generally are free to transfer their interest. There is no restrictions. You can transfer your whole shares, stock, value, everything to someone else without any restrictions. Okay. Now taxation, we have already seen yesterday who will be your pass-through and who will be your directly paying entity. In case of C corporation, they will be paying the taxes directly, and then again the dividend will be taxed at the individual level. Okay. In case of termination, right now I'm not taking this whole thing because it is a very detailed manner. It will be included in each and every chapter. So even if I start explaining a single thing, I'll have to explain the whole topic, else you will not able to understand. So I'll take this termination topic, that is known as liquidation, in our upcoming topics. We'll see the liquidation in case of partnership, liquidation in case of S corp or C corp. What are the effects? What are the tax treatments that can be done? At that time we will do it. So only this termination right now I'm not taking. Okay. Let's start with our next upcoming topics, that is accounting method. So what are the accounting methods which are used in our normal day-to-day life. In US taxation, if you guys are from accounting background, you can remember this thing, cash, accrual and hybrid are the common method of accounting. Okay, but it is not necessary to use the same accounting method for filing the tax return. It is possible that you are using cash method to record your transaction in books, but while filing the tax return, you are using a accrual method. Okay, in some of the year, let's say you have used tax in tax return, you have used a cash method of accounting for, let's say, year 1, year 2, but now in year 3, due to increase in your gross receipt, there is a limit of gross receipts. If your gross receipts are more than $27 million for last 3 years, so you'll have to average out by 3 years. Okay, so what you will do, you will take the 3 years gross receipt, year 1 gross receipt, year 2 gross receipt, and year 3, divided by 3. Whatever is this amount, if it is more than $27 million, then the IRS has mentioned you have to compulsorily use the accrual method. Okay, now let's say at later point your gross receipts are reduced by $27 million, you can come back to the cash method. So if you want to shift from cash to accrual or accrual to cash, you need to take a consent for this kind of changes from the IRS. For that, how you are going to take a consent? You will be filing form 3115. No need to remember the forms, but what I suggest, on your last page of the book, whatever book you are using right now, for just making the notes, on last page, wherever on daily basis, please note down the form numbers as and when I mention it. So after the completion of class, whole form list will be ready with you. Whatever forms are used in our part 2 exams. Yesterday we saw 8832, we saw 2553, this 2 forms, right? Today you can jot down one more form, that is 3115, for requesting to change in the method. Okay, now this method can be what methods? I'm not talking about just cash and accrual. We use inventory valuation method. We use asset depreciation method. There are so many methods used in accounting and taxation in US. So let's see what are the different changes for which you can file form 3115. Okay, so change in accounting method, that is from cash to accrual. Accounting method means cash to accrual method. Okay, it will generally require a consent of IRS, including changes in either overall system of accounting for gross income or deduction or treatment of any material item used in the system. What do you mean by material item used in the system? Let's say you were valuing your depreciation through reducing balance method, means let's say GDS system is used, general depreciation, and alternate depreciation system is used. So these are the 2 methods in which you will find makers and acres method. Right now you're not able to understand this. Those who are just watching the demo and they want to understand about the depreciation method, the video has already been uploaded on our YouTube channel just for depreciation topic. It is for 1 or 1.5 hour of session where I'm just talking on whole session about depreciation, types of depreciation, what extra depreciation you can get. So let's say for this, coming back to the point, if you are using makers method, now you want to shift to the acres method or vice versa, that will be a material change in your deduction, right? Because depreciation, you are going to take a deduction in your tax return. So for material change in your deduction, or if there is a change in gross income, let's say you are changing your income method from cash to accrual, so now there will be a account receivable newly added. So if there is this huge changes, you will be filing a 3115 form to request the consent of such changes. Okay, IRS consent is not required for the following changes. See, if you are adopting any of these 5 changes, then you don't have to file 3115 form, right? What are these changes? If you are adopting LIFO inventory valuation, so inventory valuation is a kind of method for inventory, right? So it can be FIFO or LIFO or weighted average, but you can use any method. It can be FIFO or it can be LIFO. If you want to change your inventory valuation method from LIFO to FIFO, it will require a IRS consent. And for taking the consent for this LIFO and FIFO, you have to file a form that is 970. 970. Again, one more form is added for today's class. 970 is the form used for application to use LIFO inventory method. It must be filed. Okay. Now switching from declining balance depreciation to straight line. As I mentioned, if you're shifting from a depreciation method from declining balance to a straight line, this is an exception. For this particular thing, you don't have to file 3115 form. If you are making the adjustments in the useful life of asset, as you make the changes in useful life of asset, what will happen? Your depreciation can increase or decrease. Okay, so because of that thing, you don't have to make any this consent. You don't have to take any consent from the IRS for making any changes into life of the asset. Sorry, guys. Okay, the D option, what it is mentioning, if you want to correct any errors, let's say you have omitted to include certain expenses or income, so you are just correcting an error in computation of the taxes. That is, you have omitted to include certain income in your books, for example, and now for tax return you have to include it. So just correcting it, it doesn't require your consent from the IRS. Now, certain method situation involving small business with no more than $27 million in average annual gross receipt, means can I say those businesses which are on cash basis, and for just small methods, if they are changing, valuing the investments, valuing the inventory, these small changes will not require the consent if your gross receipts are less than $27 million. And this is average gross receipt, guys, not exactly 27. You have to take an average of past 3 years. Okay, if you are changing the accounting for research or experimental expenditure as it pertains to section 174A, don't have to remember any section numbers. Any research or experimental expenditure is something which is incurred just before starting your business. Okay, let's say you are going to launch some new product in the market which has not been launched yet, so you need to do some experiments, some research, some market research you need to do. All those, doing all those expenses, you were recording it on cash basis. Okay, and then later on you shifted to the accrual basis. So in that case, change in accounting for research or experimental expenditure as pertain to this section will not require this form. Okay, the accounting change shall be treated as initiated by the taxpayer and made with the consent of secretary for any research experimental expenditure. What do you mean by this? In whatever state your organization has been established, wherever the article of organization is filed, you have to just take a consent from the secretary of that particular state. You don't have to file this form on a federal level. Okay, just a minute. For any research and expenditure paid or incurred in first taxable year beginning after 31st December. So this rule is applicable in 2022 for whatever expenditure which starts spending on after 31st December 2021. Okay, more information will be found in study unit 14. When we do the study unit 14, sub unit 4, we will see that, and study unit 14 is regarding corporations. Okay, so corporations, if they are formed, just before that there is a organizational cost. Okay, and formation cost, I can use the word, that all cost. And if it's experimental and research related, in that if you are changing the method, no need to inform to the federal level, you can just inform at the state level and change the method. Okay, so next is cash method. This is very simplest form of method which I can say is used by the normal taxpayers, day-to-day taxpayers. That is, actually when you receive the cash, you will record it as an income. The cash equivalent is actually received. Cash or its equivalent is constructively received. What do you mean by constructive receipt? You have received the rights to use that cash. Let's say you have performed certain services and the check has been received in your mail. Okay, mail means physical check you have received. but you have not yet deposited it to the bank. So can I say you have already received the right to use that amount mentioned on the check? The answer is yes. So this will be called as your constructive receipt. It doesn't matter when you are depositing that check into the bank. That is your constructive receipt. Same way, I'll take one more example, dividend. If dividend is declared, this is not a constructive receipt. When dividend actually is received through a check, okay, a check amount is received, then on this date it will be called as a constructively received, right? Next is, what do you mean by cash equivalent? It is mentioned, the meaning of cash equivalent is given over here. At the time a person receives non-cash form of income. I'll take one example. Let's say I'm providing educational services to Mr. A. Now Mr. A, instead of giving me the fees, he is giving one of the property to me. Let's say he's giving me a laptop. So can I say I am receiving a non-cash amount, a non-cash benefit from him? So what I'll do is, this laptop's FMV will be called as a gross income for me. So this is known as cash equivalent. If at any time a person receives non-cash form of income such as property or services, the FMV is included in the gross income. The laptop which I'm going to receive against providing the services for teaching, that laptop FMV I'll include it in my income. Okay, this applies even if property or service can be currently converted into cash at an amount lower than the face value. See, it can happen that I don't want the laptop right now. So what I'll do, I'll just sell it and convert it into cash amount. So then also it will be included in my gross income. Got it, guys? Now, cash equivalent is a property that is readily convertible into cash and typically has a maturity of 3 months or less, right? So let's say instead of laptop, they has given me some shares and securities, but that shares and securities which I'm receiving is having some restrictions on it. So like, there is some lock-in period which was there on that stock, share, securities. Due to that, I'm not able to sell it for next 6 months. Can I say there is a restriction on this security? So I'll not consider it as a cash equivalent. Cash equivalent means readily you can sell it in the market, right? So cash equivalent are so near to maturity that so near to the maturity that the risk of loss due to change in value is immaterial. Means within 3 years, or let's say this shares and securities, there is no restrictions on it. So within 3 years, if I sell it in the market, there is no material change in the value of it, or it is not going to reduce its value. So very minimal value is going to change, then it is known as there is the immaterial change in the value. The following are considered as a cash equivalent. What are it? Checks. See, check is not going to change its value, right? Property. If you have a land transferable at a FMV will be considered. Promissory notes, which will be valued at a FMV. Any other equipment which you get or any other item which is other than cash or a bank balance, that is check. Other than that, whatever you receive will be valued at a FMV, and this FMV is known as cash equivalent if you are readily given an opportunity to sell it in the market. If you're not readily able to sell it in the market, it is not a cash equivalent. Okay, if the value, the FMV is not determinable of that property, then what will happen? Whatever we are giving in exchange, let's say I'm giving educational service in exchange, I'll take the FMV of that services. Okay, in market, at what price I'm giving the same service to other people, I'll take the same price and record it as a gross income, and that same price will be considered as my laptop's price. Okay, if FMV is not available, for example, but it will not happen. It will happen in very rare circumstances. For each and every product, what is FMV? Whatever is the latest sold price in the market, that you have to check. Each and every product which you're going to receive, it might have sold at least once in the market, except for certain shares and securities of a newly formed company. If you receive a shares of a very newly formed company, No one has yet sold that shares in the market, so FMV will not be readily available for that. Okay. Next is, I'll read the second point. I think we have done. Yeah. Third point is, if both the property received and the property given are impossible to value, an unsecured promise to pay from a person with the unknown credit worthiness. So right now I have provided the services, but I am not sure the value of the services, and vice versa for that property which I'm going to receive, I don't know the amount. The transaction will be treated as open and consideration is not viewed as income until the values are ascertainable. Means no one will record any income in the books or in the tax return unless and until the value is uncertainable. Got it, guys? I hope this much is clear. Cash equivalent. This what we are doing is cash method. Under this, the first one we saw is in case of cash method, when it will be recorded, when actually it is received. Second, when cash equivalent. So this we have read about the cash equivalent. Now the third one is if there is a constructive receipt. When you actually receive the amount which you can use it, you have the right to use it. Okay, you have the possession of that check. So let's say if you receive a check but not at your address, at some other third party location, still you have not got the constructive receipt of that amount. Once it is actually delivered to you, it will be called as constructive receipt. Okay, now here I'm not reading it, but you can just go through it. Constructive receipt is under the doctrine of constructive receipt, an item is included in the gross income and the person has the unqualified right to immediate possession, means actually having the possession, actually having the right to use it. Okay, you can just go through it. There are some examples which are given over here. Okay, next is a receipt or constructive receipt by an agent. Okay, if some agent is working on behalf of you and has collected the money on behalf of you, that will also be called as a constructive receipt. Even if you have not actually received it, but you have received the right to use it. So receipt or constructive receipt by an agent is imputed to principal. Imputed to principal, this wordings simply mean it will be considered as a constructive receipt only. Okay, then we have economic benefit. Wait, let me read this one also. I don't want to leave anything. A person constructively receives income in the tax year during which it is credited on his or her account or set apart for him or her or otherwise made available so that they can draw upon it at any time. Draw upon it at any time means you have given the check. Now it is their duty to deposit it. Okay, at any time they can withdraw it. Or let's say you have given, you have already transferred the balance amount through direct deposit directly into the bank transfer. Then you have already given the right to use that money to the other person. That will be called as constructive receipt. It is more than the billing or an offer or mere promise to pay. Okay, it's not just a promise to pay, it's more than that. It's actually you're receiving it on hand. It includes ability to use on demand. As and when it is required, you can easily use that money. As with escrow fund, subject to a person's order. What is escrow fund, guys? When you want to make some renovations into house or make some, or let's say you want to buy some new property, you kept a fund aside into the escrow account. In escrow account, it's a kind of a fund where you save the money and later on it is used up for the construction purpose. Okay, so this is one example. It's like a escrow account. As and when the demand arises, you can withdraw the amount and pay it further. Next one is deferring the deposit of check does not mean deferring the income. You're not depositing the check for next 2 months, 3 months. That doesn't mean you are deferring the income. I'll take one example. You receive the check. You receive the check on this in December, 28th December, but you are depositing it at the end of Feb. So still it will be recorded as an income in the December month only because it is a constructive receipt. Okay, income will not be constructively received if taxpayer control of its receipt is subject to substantial restrictions or limitations. Means there can be a deferred compensation agreement. What do you mean by deferred compensation agreement? Let's say I have an agreement with my employer that after completion of 1 year, I will receive extra amount of salary, for example. So that extra amount which I'm going to receive is in the upcoming years. It's a deferred compensation, but the agreement has been done today only. So I can't include the whole amount today in my income. In future, when I'll receive actually that income, since the agreement is entered today, that doesn't mean it is a constructive receipt. When I'll actually receive it in future, I will include it in my income at that time. Okay, so this is about the constructive receipt. And if your agent is receiving on your behalf, it will be called as imputed to the principal. Simply means it will be considered as a getting the money on your account only, right? Economic benefit is what court has interpreted the definition of gross income to include any economic or financial benefit conferred on the employee as a compensation. If you receive as a compensation any amount, okay, it can be economic or financial benefit, both, it will be considered in your gross income. So this economic benefit theory is applied by the IRS in situation in which employee or independent contractor receives a transfer of property that confer an economic benefit that is equivalent to cash. Let's say for providing a services, you are receiving a small property. Along with that, there are some economic benefit to that property. Let's say a paid parking is also allowed for you free of cost now. So that is an extra benefit which is provided along with the property. So you will include whole amount, whole FMV of the property, including that parking, as a gross income. Okay. See, there is one example of economic benefit of a property received in which will be included in the gross income. The fair rental value of the car that the dealership provides for the personal use of its president is a gross income. Okay, let's say a person has provided the car for the personal use. Okay, the fair rental value of that car that a dealership provides for the personal use to its president will be called as a I can say income, gross income. Okay, next is economic benefit theory applies even when the taxpayer cannot choose to take equivalent value of income in cash, right? So if the equivalent value of cash is not available, you can take what other benefits you are receiving from that property. If the cash value can't determine, you can take what value that property is. Simply summing up everything, it is saying that if you receive anything which is not a cash, non-cash item, you will take the FMV of that item into your gross income. Okay, consider it in your gross income. Dividends example is there, constructively received when made subject to unqualified demand of the shareholder. Means when it is declared, it will not get called as a receipt. But when you actually receive it, receive the amount, right? Future, the check is received. See, it doesn't happen that as soon as the dividend is declared, you receive the check. You can receive the check after, let's say, 30 days in the month of Jan, right? So in month of Jan, it will be recorded as a dividend. So here it is given, if a corporation declares a dividend in December and pays such that the shareholder receives it in January. So dividend is not treated as received in December, but it will be treated as an income in the month of Jan. There can be one MCQ question based on this calculation. Dividend is received in this month and it was declared in this month. So in which month we are going to consider as a dividend income? The answer will be January, not the December. Okay. When the bond is sold between the interest payment dates and the interest accrued up to the sales date, it is added to the selling price of the bond. What do you mean by this? Whenever there is a bond, just like a investment, that shares and securities, there can be a bond on which you receive interest income. So if this bond is sold between the interest payment date, okay, let's say here the interest is accrued and here the interest is actually paid. Before receiving it, you are selling the bond. Okay, so in that case, what will happen? This is one exception where constructive receipt you will not check. As soon as the interest is accrued, you have to include it in your gross income. It doesn't matter whether you have sold it before receiving the interest income. And this settlement can be done when you actually sell it to the third party. They can, adjust this amount of interest at that time in the sales price later on. Okay, but for the purpose of tax, if the interest income is accrued on bond, you have to include it in your income before uh, uh, before receiving. If you sell it, still you have to include it in your income. But in dividend, you have to remember, once it is declared and it is paid, after that you have to include it in your income, not before that. Got it, guys? I hope this much is clear. Same way is that of the prepaid rent. If you're paying a rent, sorry, if you're receiving, here they are using the word prepaid rent, but you are a person who's the owner of the property, you are receiving the rent, then it will be that advance rent. I can use the word advance rent, which you're receiving, will be your gross income when it is actually received. Okay, so let's say you received a security deposit, which anyways is going to be refunded after the end of the tenure. So refundable security deposit will not be considered as your income. If the tenant, those who is living in the house, is a tenant, is paying some improvement expense, rent expense, in the lieu of rent, sorry, in the lieu of rent, they are doing some improvements, they are doing some painting work, they are doing some renovation work on exchange of paying the rent, then it will be included in the rental income for the owner. It will be called as rental income. Okay, then we have lease cancellations. If you have a lease cancellations, it will also be included. Okay, then what is there? Advance rental payment must be deducted as an expense by the payer during the tax period to which the payment applied. Means I can just mention it like this. Let's say you are having a rental property. Now, what expense you might incur for rental property? You are paying utilities bill, okay, or you are paying, let's say, mortgage interest expense, or you are paying real estate taxes. Okay, so actually when all these three are paid in advance, then it will not be deducted at that time, but it will be deducted during the tax year for which the payment applies. Okay, even if you use accrual basis or cash basis, if you have paid these things in advance, but it relates to, let's say, 2023 year, you have paid these expenses in 2022, you cannot take these expenses in 2022 tax return. You have to use it in the year in which these advance payments are applied. See, if you receive advance rent, advance income, I'll use the word, then it is included in the year of receipt. Okay, but if you pay some advance payments, that is this utilities, mortgage interest expense, real estate taxes, but all this pertains to the next year, then what will happen? It will not be allowed as a deduction in the current year. Okay, so this is what is about your advance rental payment. Okay, next is last one tip is given, that is an employee who receives 20, sorry, tip is not given, this is a tip income. Basically in my class notes for each and every topic, I used to mention some information, that is tax information, a separate information which is not given in the paragraph. So I thought that it was, but tip income is what? If a person who is working in the restaurant industry or any service related industry where he is going to receive a tip income, so if he receives it more than $20, then he will have to report it to the employer on the 10th day of the next month. Okay, so we will see this topic later on very well in the business deduction topic. Again, it will come that what all incomes and expenses can be included and reduced from your business income. In that, we'll see this topic again in detail, but right now for this purpose it is simply mentioned, if you receive a tip for more than $20, you have to include it in your gross income, as well as you need to report it to your employer. Report it to the employer by 10th of the next month. Why? Because if it is more than $20, then it has to there has to be a payroll taxes which will be deducted by the employer. Okay, we'll see that thing later on. No worries. So tomorrow, one more day we will require to complete this topic. We have only these two things left, and then we'll start with the accrual method is simple. That's not an issue. We'll complete that quickly. Hybrid method, and then we have valuation. Inventory valuation, where it is FIFO, LIFO, and specific valuation method. Okay, so we'll try to complete the chapter tomorrow. Maybe tomorrow we can extend our session for 1.5 hours to complete the study unit number 1. Okay, because MCQs are to be done and the revision also needs to be done. So within 1 hour, I'll try to complete the remaining topics. The accounting period is starting just after this. So only 4 to 5 pages are left. So 1 year I'll 1 hour I'll complete it, and the rest 30 minutes will solve all the MCQs from this revision flashcards. Okay, all the MCQs are there, and whole chapter we can revise it topic by topic. Okay, so that's it for the day, guys. Tomorrow we'll meet again at 8:30. Those who have decided to enroll in the batch, since this was a demo session, you can just ping me on WhatsApp for the enrollment process. Tomorrow will be the last demo sessions. After that, our Zoom link will get changed. Only those who have enrolled in the course will get the Zoom link, and it will be shared in the group. So those who have enrolled and not added in the WhatsApp group, then also please let me know. Okay, I think Vignesh is there. You are added in the group, right?
Yeah, I am added, but I am not get the mail.
All the link will be shared in the group only. No need to check the mails. Mails are for those who are not added in the group. Okay.
Okay.
Done then. Thank you guys. Have a good day. For any question, queries, do reach out to me. Have a nice day. Bye.
Bye.